Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning and a play that we're doing in this market right now. So basically, taking a step back, let's take a look at the general trend of the market. And basically, since the February lows, the market is still in an uptrend. And last week, we actually on the S&P 500, we did two things happen. We did take out the April high midweek, but then we did get rejected at that 2100 level on Friday when the market sold off pretty hard. Pretty much we saw the same thing in the NASDAQ. Did take out its April's high, but then on Friday it got rejected. But that's okay because nothing goes straight up, and we're going to continue through a sort of volatile fashion, I imagine, most of the summer. It's to be seen. So let's talk about the levels we're looking at. So in the S&P 500, as long as it holds at 2076, which is a 50-day moving average, that'd be the first level of support. And of course, if it goes down to 2025, that was the May low, and if it undercuts that, then I'd say the uptrend may be negated and we would start to worry about the market. But so far it's made a higher high, and we're looking to see if it can make a higher low. We'll see what progresses. Same thing on the NASDAQ. The NASDAQ can stay above that 4,800 level. We should be in pretty good shape as long as then it doesn't go below that and then undercut its May lows. So how to play this market? Well, as I've said before, the breakouts aren't really materializing. We get stocks to break out and they end up coming back in. We did see a pretty good breakout. Last week was Dave & Buster's. The symbol is PLAY, P-L-A-Y. And great earnings. It broke out and actually continued higher, went from about 44 to 47. So that's pretty good, but that's a little bit of a rarity. More everything else breaks out and comes back to the buy point. That's what I want to talk about. One of the stocks that we're adding to this morning is Ligand Pharmaceuticals. That symbol is LGND. And basically, it's back to that 114 pivot point. It broke out through that 114 area after consolidating for a whole year, made that high at about 114 last July, consolidated about 36%, came up to that 114 in December, consolidated a little bit again. Then April it broke out past that 114 level, ran up to 131, and now came all the way back in with the market, and that's typical. However, there was no fire sale going on, so technically it's very strong. It's back at the pivot. So here's an area you can add in at these levels, and I would get worried if it started to drop below 110, and probably just set a stop at about 103, 104. So that's about 10% away, so you want to position size accordingly. If this trade is for you, you should always consult your financial advisor to see if this trade's for you. But this morning we were adding it right around that 114 area to this thing, to Ligand. Now Ligand is an interesting biotech company, meaning it acquires or develops early stage products, and then it partners with the larger companies that are better at late stage and commercializing the products. And just talk about their growth. Basically in 2008 they had about 9 projects they're working on, only 1 was approved, and now they have a little over 100 product platforms they're working on, and they have 13 commercialized products, and they're partnered with over 85 major pharmaceutical companies. So they're basically just, it's a numbers game for them, sort of like the most shots on goals they can take, they end up being successful. Now in 2015 they're a little bit made around about $1 billion in revenue, and by 2017 that's expected to come up to about $2.5 billion in revenue, and in 2017 analysts are looking for them to have EPS at about over $5 per share. Excellent institutional sponsorship and accumulation over the last few quarters, and this is why we like the stock. So in summary, the market is in an uptrend. Watch the levels I mentioned, the S&P and NASDAQ. Ligand, you can add it here at 114, but again, check with your financial advisor. And of course, if it drops to 103, 104, this might not be the time for that trade. So as always, the price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.